if you can't tell, I'm an Eagles fan. Grew up an Eagles fan, been an Eagles fan for, about 45 years. I don't know if that's something that you've kind of thought about or not at all.
Nope.
No opinion whatsoever?
None whatsoever.
Well, one of the things that my research has uncovered is actually a secret research project between SpaceX and the NFL. And what they found was that, one of the players on the Eagles team, Jalen Carter, when the offense would snap the ball, the force that he was creating between his cleats and the turf was actually disrupting the field. And so they found that it was roughly similar on a per square foot basis to the force that Falcon 9 was creating when it was taking off from the launch pad. So SpaceX, NFL teamed up, put together a really interesting project. It's going to be the next rocket launch pad. It's going to be called the Eagle Heavy Launch Pad. Also going to be something that they've reworked the turf really between the hash marks all the way up and down the field. New turf in place for the Super Bowl. Watch for it. You're going to see the fastest takeoff for defensive linemen recorded in Super Bowl history.
Jake, I am completely flabbergasted right now on how you managed to connect all those dots. I was like, that is very well executed. Holy crap. The force of the cleats leaving the turf. Whoa. I was like, wow.
Okay, let's shift gears a little bit. So since the last time we did a podcast, it's been a couple weeks. It has been a really, aside from sports and the fun stuff, right? It's been a very interesting, call it a high vol market, call it a active news week. I think the last time we did a podcast, we still didn't have Trump, doing his inauguration. It was before the real kind of major public announcement with DeepSeek. We have also had a lot of news around tariffs, around U.S. and other foreign country relations. So a lot of things to catch up on today. Let's start with DeepSeek. So you've seen the announcement, right? What's your kind of initial impression?
Well, my very first impression was, oh crap, all my tech stocks are down 4% plus. And I had no idea what was going on right when it was announced.
Try 20. Nvidia was down almost 20% on the announcement.
I didn't own Nvidia at the time.
Okay.
So I kind of dodged that one.
Your mistake.
My mistake, because there was a 10x ramp up.
Just by the way, everybody on this phone call, everybody on this podcast owns Nvidia in some way, shape, or form. It's almost impossible to escape it. If you own U.S. equities, you own a big chunk of Nvidia. Robert, if you own U.S. equities, also you own some Nvidia in there.
That's a fair point. That's a very fair point. I definitely have some ETFs with some. So
okay, back to the reaction, right? Initial reaction. Oh my gosh.
Yeah, and I think that there's just a ton of questions that come along with this news announcement, because what exactly does it mean to the layperson? Because I read it and I'm like, why is this causing everything to crash? And to my best knowledge, when I first looked at it, it seemed like it was just a dramatic reduction in cost, and that made all these other expensive projects seem like they were, let's say, years behind for some reason.
Good point.
Well,
I mean, typically cost reduction is a good thing, right? We find out how to do things better, more efficiently, more cheaply. Markets typically cheer that sort of thing. The first takeaway that I had was that it was a realization, or even kind of almost an I told you so moment about how concentrated the markets have become around this AI component, around this AI theme. And so a news story like DeepSeek, and we can talk about what was news, what was, maybe just a little bit more hype. But assuming that entire story was factual and accurate, it really kind of, it revealed how concentrated some of the pockets of the market have become, and how tied a lot of the market has become to this AI theme.
Yeah.
And so we saw Nvidia stock down, in the high teens, low 20s. Initially, it has recovered. Any Mag 7 or any hyperscaler name also sold off on the news. So that's kind of the first leg down, right? And again, some of that has recovered, and even recovered in a pretty meaningful way since then. I
want to understand this Nvidia DeepSeek connection a little bit better.
Great point.
Because I can understand how DeepSeek could make ChatGPT or Gemini scared. I kind of get that with the operational costs relative to these others, as well as the computational output being quite robust relative to the others. But Nvidia is a chip manufacturer and designer. Well, I guess more of a designer at this point.
Yep.
And their operational efficiencies that they bring from their chips is apparently so great that companies are more than willing to pay a premium, because the savings from those operational efficiencies just exceed any additional cost that comes with the chip.
Yeah.
So I'm thinking to myself, okay, they seem like they're a staple in optimizing businesses, and yet the DeepSeek announcement and it plummets. So connect the two for me. Help me understand this a little bit better.
So I think where I see the connection is, number one, I think about Nvidia as supplying, they're not the only chip designer, they're not the only chip supplier out there, but they are the designer of first choice, especially for chips that require, really heavy computing loads, really advanced, high speed, high power computations. Mm-hmm. There are other chip manufacturers already out there that can handle some of the softer workloads, but I think the market has typically assumed that anything that is AI centric is going to have to run on the highest end chips. And I think that's what you've seen out of the hyperscalers, locking in all the Nvidia supply going forward. I don't know how many years. You saw, just before DeepSeek had their announcement, you saw Meta made an announcement for their annual plans to buy, again, billions of dollars worth of chips from Nvidia. So I think up until that DeepSeek announcement, Nvidia kind of had the market cornered in terms of anything AI related. They were the supplier, or at least the designer of those chips, those very, very high-end chips. And what DeepSeek has claimed, again, this is the news. This is not necessarily fact. Claim that they, perform that feat, accomplish that goal without using any of the highest-end Nvidia chips. And so I think the follow-on there is a question on: do those high-end chips really have the same market that they have, right? A year from now, does Meta still place that same order with Nvidia, or do they say, well, Nvidia, we've kind of circled up, okay, these are the Nvidia related projects, but there's a lot of other kind of low-hanging fruit that we're going to use just kind of lower scale chips for.
So basically, if I were to sum that up, it would be something like stocks always trade into the future. There was a lot of demand anticipated for these particular chips that Nvidia was producing, and now that demand might actually not be close to what was originally priced in, so the stock took a dip.
I think that's the concern, right? In stocks, what we've said many times is stocks do not like uncertainty. It's been out for at least a few months, right? It's not something that came out on the day of the news, but they did release a new model. That new model was pretty impressive. And so I think the uncertainty around the future expectations of Nvidia chip sales is really where you're going to here with the sell-off in the stock. Now, whether that is material, I think is completely up in the air. It's a completely up in the air question. One of the things that I'm kind of hopeful for, and this gets into how does a technology like DeepSeek or similar technologies impact the market overall, is that if you do bring the barrier to entry of using an AI-enabled tool down considerably, you've also increased the total addressable market for those tools. And so more efficiency, that's where I come back to, like, more efficiency, more accessibility. It's not necessarily a negative long-term effect for Nvidia. It's more uncertain. We have less confidence or less visibility into what the future for Nvidia holds, but it doesn't necessarily mean it's worse, right? There's a potential that making these tools more accessible to a broader, set of companies or individuals really just kind of increases the need for AI on all ends of the spectrum substantially going forward. There's a couple things that we want to touch on with AI specifically before we move on. The first is just kind of where these tools are at today. Now, they're phenomenal. I think they do a lot of things that very quickly that I used to not be able to do. It took me forever to do that, right? And that's kind of looking at editing papers, creating different ways of consolidating data, reading through long narratives of text, and getting summary points out very quickly. All very effective at those things. Sourcing, right? Citing your documents, all that kind of stuff.
Love that.
Teaching you how to look in places for information that you typically wouldn't have, because you kind of get into a pattern of looking at the same thing in the same place for the same answers, right? So all those things it's very good at. We're starting to see some AI tools that are able to solve more complex problems, more multi-stage problems. But I think a really good way to get a feel for where AI tools are today and where they could potentially go, I would recommend you guys look this up on YouTube. It was very entertaining. There's a chess match where DeepSeek is matched up against OpenAI, right? The two most advanced models for both of those AI systems, and very entertaining to watch. Starts off with, kind of normal chess moves, but quickly devolves into something that wholly looks like artifacts on a chessboard, right? So really entertaining to see some semblance of logic play through that match, but also semblances of just complete random and fictional rules that were, kind of not existent until that game was played.
Is this the thing where like pieces were popping up out of non-existence and then all of a sudden moving in weird ways?
Right. They arrive, from a vertical axis.
I saw that, yeah.
A vertical axis. Very entertaining. But there's reasons behind each of those moves, right? There's a reason behind taking a rook out of non-material and creating it and putting it on the board because you get an extra piece. So you
Love
can,
it.
if you squint, you can see the logic. But I think there's some more real follow-on things that matter for the DeepSeek announcement, for AI, and those are kind of the infrastructure that's built around artificial intelligence. And we hear about that a lot. It's very hard to kind of visualize what that infrastructure looks like. But the easiest way to think about it is electricity demand and data centers. Right now, data centers are where all these chips end up. And one of the questions would be, well, if computing is much more efficient and easier to do, and maybe you're doing it on your phones, do we even need these data centers going forward? I think the answer there is still yes, and to me that gets back into cheaper and easier and more accessible AI really means that you just have a larger overall deployment of AI. It doesn't mean that you have the same deployment done in a more efficient way. That is my expectation. That is just, that's something that I think might play out. Obviously, a lot of uncertainty there. When it gets into energy demand, again, you think about, okay, well, if we didn't need data centers, then do we need to rework our electrical grid, redesign power generation for this incremental demand for data centers? And again, I think there's still a lot of uncertainty around that, but it doesn't seem like the case for that has changed. And I think one of the interesting things is when we work with our infrastructure providers, what they do a lot of times is when they construct a data center, instead of just saying, okay, we know there's going to be demand for AI, we're going to go, buy a bunch of land, hook a bunch of wires and water pipes up to it, buy a bunch of computer chips, and then hope somebody leases it. That is exactly the opposite of what they do. Typically what we'll see is our private infrastructure providers, what they'll do is they'll buy the land, right? So they are putting some risk out there, but then before they lay a foundation, before they connect electricity into anything, they've already pre-contracted the revenues from that data center, either to a hyperscaler or to a handful of smaller clients for the next 10 plus years. And so before they take any construction risk, they've already contracted those revenues out. So they are, in some ways very insulated from a technological shift because before they put money at risk, they've got the revenues already kind of, worked out in the equation.
So let's back this up for a second. I'm an investor. I hear the DeepSeek announcement. I'm trying to get a better understanding of this AI market and the power requirements, the land requirements, the applications. Where's the opportunity for me? Where should I be looking to put my money to invest in this, or should I not be investing in this at this time?
So I think, again, this gets back to one of our core themes, which is diversification. We try to make sure that anytime we address or anytime we access an investment theme, we're doing it in a diversified way. One way we access the AI theme is through public markets, and most everybody has that theme in their portfolios, not just our clients, but everybody in the world. You're going to get that through the Mag 7 stocks, right? Everybody knows about those plays. The other areas that we access the AI theme, and really I'd say part of the AI theme is around just kind of AI and what you see in DeepSeek, chatbots, all that sort of thing. But we're also seeing AI show up in self-driving cars, in robotics, and a lot of other areas. The way we're accessing that is, again, data centers is one way. That is a much more stable, cash flow positive way to access the AI theme. Has different return and risk drivers, but still attractive return potential. Energy transmission, again, not technically data centers, but energy transmission likely to continue to uptick. And that will uptick whether we have AI or not, because there's a migration to additional electrical cars throughout the country. And again, that's a trend that's unlikely to change. It may not have the same federal tax support going forward, but I think there's a lot of people that really like their electrical vehicles, really like how they drive. They like the self-driving piece of the Tesla, right? All those sorts of things are supportive of that industry going forward. And that's still going to require electricity delivery, electricity generation. And so those themes, I think, are still fairly intact.
I also think you still have a job, because when I asked AI just now, should I invest in AI and how should I do it? it probably got about 65% of what you said. And so you went much deeper than the AI was able to. So we're getting close, but we're not quite there.
Such a comforting thought. That is such a comforting thought. We probably need to shift topics because we're going to run out of time and tape. Let's chat about the things. So we'll say last week was the DeepSeek week, right? This week is Tariff week, and I feel like we've kind of lived a couple of weeks worth of news flow in the first few days, the Monday, Tuesday, Wednesday of this week. We started off, and I think it came in over the weekend. Nice, kind of way to start out your Sunday. The U.S. has imposed tariffs on Mexico and Canada and China. And in retroactively, they, Canada and Mexico have also, and China have also imposed tariffs on the U.S. So a nice way to kind of look at your, how do I start the week? Oh, we've got a lot of volatility in the market, a lot of consternation, a lot of just uncertainty around what the future of trade relations between those three major trading partners is going to look like. Robert, in your view, what did you see play out on Monday?
Well, this is something I'm going to take a little pride in because we actually had a prior conversation on a podcast talking about tariffs and about their application and how they could be used. And that seems to be exactly how they're being used, namely as bargaining chips for the time being. Now, it's a little bit different in the China story, but when we're looking at Canada and Mexico, it was originally going to be enacted, I think, on Tuesday. It was going to be implemented, and that was put on pause. So it seems like they're going to be transitory and used as bargaining chips to facilitate some kind of trade negotiations and security negotiations around the border, which, in my opinion, is great. But there was an alternative. I won't call it a conspiracy, but there was an alternative theory as to why these tariffs were put in place, because if you looked at the revenue generation from it, it actually matched pretty closely to what income tax brings in. And so there was this whole online push that, hey, maybe they're going to get rid of income taxes. And as somebody who studies income taxes, I can tell you 90%...
I have to mute my mic here because I'm screaming so loud and cheering. I'm doing cartwheels. We are not on video, thankfully.
I wouldn't blame you. That being said, I study a lot of tax, and I can tell you 90% of the code, it's all about income tax and how you characterize certain assets and whether income tax applies. If they got rid of it, the tax code would be like
a page.
It would be it would be like 1 to 10 pages. It would be amazing.
And so you would probably be out of a job.
Right. So what's funny is first I celebrated, yay, maybe no income tax, and then I was like, wait. My future employment might be at risk if that's the case. But that being said, it doesn't look like income tax is going anywhere for the time being. So it's still going to be the primary driver of revenue for the government. But going back to the tariffs, there was a lot of fear that, these imports that are coming into the United States were going to increase costs for manufacturers and for businesses domestically, and that was going to drive prices on an inflationary basis upward for the U.S. consumer because those costs would be passed on to the consumer per the tariff functionality. China is a little bit of a different story based on some news that's been breaking in terms of how they're applying that. Apparently, out of China, there's a lot of conversations about the Chinese government devaluing money and also subsidizing companies that are sending exports to the United States to offset the added cost of the tariffs. So the pricing and the profit margin winds up being around the same, which is highly manipulative and kind of defeats the purpose of using the tariff as a bargaining chip because they found a kind of a way around it.
Right.
But I was kind of curious what you were seeing out there in terms of how tariffs are affecting the macroeconomic environment.
So I do think we kind of lived a year and a day with regards to Canada and Mexico. I think you kind of almost, and I would have loved to have been, just listening into those discussions. It seemed like your classic prisoner dilemma where, I'm assuming it's a unilateral discussion between, U.S. and Mexico, and then another one with U.S. and Canada. We saw Mexico break pretty quickly and say we're going to go back to the negotiating table. We saw Canada break shortly after that.
Wildly entertaining for the record.
Yes.
When you have world leaders come out saying, this is unacceptable, we are going to match this, we're coming right back, then 24 hours later, it's like, we're going to have a little chat first.
Makes you feel proud to be an American.
Yes,
right?
It does.
Anyway, I don't want to get too political here, but I think the lingering effect of China is obviously what the market is most focused on. I think, we have great relationships with Canada and with Mexico. We trade a lot with those partners. I think it's in everybody's best interests U.S., Canada, and Mexico to have a strong alliance there. I have no doubt that that will happen.
Agreed.
And I think that the U.S. is definitely in the strongest negotiating position, but it's not like we don't have anything to lose. Home builders example would be, when you heard there's a significantly higher tariff on Canadian imports, well, a lot of that is lumber. Syrup also. I love my Canadian maple syrup. And but lumber, multifamily housing is in a little bit of a rough patch right now. So a lumber tariff would be a challenging, kind of thing for multifamily to work through. They just worked through a serious, inflation issue, a labor shortage issue. Call it 2022, 2023, kind of just getting past that to get hit with another, huge block of tariffs and just volatility on their input prices would be a challenge, right? So specific industries, I think, would face some challenges there. As it relates to China, the Chinese government does have the ability to move some things around internally to mute the impact, right? But they're also being strained to re-stimulate their economy. And so, I think they're caught in a very difficult position. Don't envy them, but they're having to try to find ways, absent of tariffs, to stimulate their economy. One could say that they were sending out a lot of stimulus in kind of the second half of 2024 in advance of some of the headwinds that tariffs may create, kind of girding for this particular scenario, this particular negotiation. And so to the extent that they again, can effectively stimulate to offset the impact of tariffs, and that can be through subsidies. That's no different than any other government subsidy, right? It's stimulative, it puts more liquidity into the system, but if you subsidize to impact a headwind, then that's less subsidy that you can do for any other kind of structural reform that you're trying to support. So I think it's a challenge for China. Again, China and the U.S., we have very I don't know if strong trading relations is the right way to describe it. We trade a lot with China. China trades a lot with the U.S. It's, again, in everybody's best interest to make sure that relationship is still intact. But I think fairness on both sides is really what we're going after. And at this point, I don't think that's the direction that we're moving in. But I think you've got, Trump is a negotiator. He is a deal maker. I think he will have one-on-one conversations with President Xi Jinping. And those things will likely result in some kind of deal at some point later on this year.
I would agree with you. And I think free trade at the end of the day is going to be advantageous for every country if we're able to structure it correctly and able to promote business, because business employs people and helps promote a healthy economy.
Yeah. So you've got potential volatility, new winners, new losers throughout 2025. That's going to create some market volatility. I think we're seeing robust growth expectations, but market volatility is something that, again, markets tend to back away from volatility. So if we don't see higher multiples this year, it wouldn't surprise me at all. I want to pivot to market valuations. One of the things that we've been, talking about for, probably a year and a half is, U.S. equities, overall public equities are trading at pretty lofty valuations. Obviously, the fact that growth has been really robust has supported those valuations, especially with regards to large cap U.S. equities. But what we have now is an interesting dynamic where you have valuations which have stayed high. Think about, earnings priced at, between 15 and 20 on an earnings multiple for U.S. equities. That's a fairly high relative to historical averages. Small companies are still pretty cheap. And if we go outside of publicly traded companies, private companies are even cheaper in relative terms. So
one of the questions I asked before was where should an investor be paying attention for the opportunity? The public markets, the private markets, where are you seeing the opportunity, and what do you think is the best way to kind of dive into them?
So I think one way to look at it is, take off whatever hat you normally wear for your job and put on your CFO hat, right? You're the CFO of a public company, and you're trying to figure out where your next incremental dollar of earnings is going to come from. Now, that you've had really strong growth over the last couple of years. It's supported your stock price, and your stock is trading at 20 times earnings, right? Or maybe something along those lines. That's a good multiple, but you've also seen it maintained, right? So you're not thinking that's something that's going to go away tomorrow. So now you got a little bit of confidence that your stock price is attractively priced and supported by the market. You're thinking, okay, well, the easiest way to get earnings, if I look at the landscape. I could deploy more capital and do more projects. There's uncertainty in those projects. They might work out, they might not, based on your track record. Or you could look at M&A and acquisitions. And it's highly likely that the CFOs of most large public companies are being fed potential acquisition candidates all day, every day. When you look at the relative valuation, though, you can take $1 of earnings priced at a 20 times PE multiple. And if you buy a private company, a lot of private companies are trading, kind of in that 7, 8, 9 times, multiple, right? So significantly cheaper. You can trade $1 of your $20 earnings for $1 of $10 or $8 earnings, and you've got automatically increased earnings per share growth, right? So that trade to a CFO looks pretty attractive today. It looked attractive 6 months ago. I think the main difference is 6 months ago, we had a different regulatory environment that likely is changing, and the ability for public companies to make acquisitions and also for private companies to make acquisitions is likely going to continue to improve. It's going to be easier to do those things. They're going to face less regulatory headwinds. And so I would expect 2025 to be a year, and even into 2026, where really that transaction volume starts to pick up.
So high M&A, good deal making, lower regulation. Where do you see the opportunity?
So that's an interesting way to think about it, right? So if you're the CFO of the big company, you think, well, this is great. It supports earnings growth. But as the investor, the equity holder of that company, typically what you see in the market is if a large company announces they're going to make an acquisition, the large company sees a reduction in their price. The small company or the private company will see a pop in their price, right? And hopefully the combined value of those is larger than they are separately, right? That's your synergies. But when the deal is announced, you typically see effectively a flow of capital from the large company from the acquirer down to the target. What that means in market speak is, assume the acquirers are the big companies, that's your S&P 500. Assume the targets of the small companies in the private markets. You're likely going to see capital flowing out of those large companies and into those smaller companies, publics and privates. And so what we're doing in our portfolios in a couple different ways is we're trying to get ahead of that trend. We do it in a small, in small ways by just investing in smaller publicly traded companies. That's your small caps, right? You hear about them, the Russell, 2000 growth, 2000 value. Those are your small companies. We invest in a different index, but we like those companies from a relative valuation perspective. But we've also been creating new access points for our clients to touch the private equity space as well. And likely those are also going to be recipients of those dollars. And there's a potential that you see some of that convergence where private equity companies, small companies get bid up, and the providers of that capital, the larger companies, you're going to see an outflow or a slight reduction in their multiples. So a little bit of a convergence there.
So Jake, just to summarize what you just said there, it sounds like diversification is the name of the game. These larger companies are looking long-term and figuring out ways that they can also diversify into new acquisitions. And if you're looking for short-term gain, maybe you could buy some of these potential acquired firms before they get acquired.
Yeah, that's a good point. We want to go to where the money's going to be, not where it has been.
Fair point.
Yeah. This has been a lot of fun, Robert. I am very excited for the game this weekend. I'm a homer. I love the Eagles, but I really hope for a great game, great competition, a lot of scoring. I hope Saquon gets his 4 touchdowns like I predict. We'll catch up next week and fill you in on the details of the game and maybe even some financial information as well.
I can't wait to find out who Saquon is.